MD Mahindra Financial Services joins in for a quick perspective on their business and an update on how things are unfolding there. Mr. Iyer, it's great to have you on the show. How much does the rate increase announced by the RBI day before yesterday impact your business at the core?
No, so I think, in retail business, not that every time there is a borrowing cost increase, you pass it on, but then you kind of accumulate to some extent and then you pass it on to the consumer, because ultimately the vehicle buyer or a tractor buyer also reprices their offerings to the customer over a period of time. So I would think that to start with, we may have to accept this rate increase and then eventually pass on to the consumers. And same is true when the rate drops happen. So I don't think we are overly worried about this little increase that happens. But clearly our own view is the trend is that the increasing rates will continue, and which case acquiring assets will have that little pressure of the rate going up.
As we understand, Ramesh, you've also become the third largest agri-equipment lender in the US, if I understand that correctly. Firstly, congratulations. This is indeed a big feat. But tell us a little bit more about where you see your US business headed from here.
So, about a decade back, we set up this business jointly with DLL as our joint venture partner there, financing tractors. We've spread across the country out there in the US, and it's now upward of $1 billion as a balance sheet. We believe the next $1 billion could happen in little less than the time that it took in the first $1 billion, because the setting up, the business volumes were growing, and we now see even our own tractor business is accelerating, and therefore the next 1 billion could come much faster than it has come. That's one. Second is it's been profitable from a very early stage as the partner brings in funds at an affordable price, and then we have the process to deliver services to the dealers and the consumers, which is again through our experiences of running businesses in this market. Put these two together, I think we've been running a very profitable business, and next 5 years would be even more exciting with our business growing further from where we are.
I think, part of the reason of calling you has also been the fact that JM Financial has a buy on your stock with a target of 625. And, the peg there is really the sustained recovery in the rural economy that we are experiencing. Do you think that, given the forecast put out on monsoon, that this would be perhaps a stronger year in terms of demand, just like the last two seasons?
I would think the answer is yes. I mean, if you look at our business for the 2 years, barring the last 1 year, we went through difficult times, and the reasons for going through those difficult times were poor monsoon and lack of activity in rural India. And if those things are doing well now, if the monsoon last year was good and if this year is likely to be average plus, and we do see at state level there are activities where the assets and labor is better deployed, I would think the unclear answer is we do see sentiments very positive. And last 4 quarters, that's the year gone by, we saw every quarter improvement in terms of growth in business as well as in the asset quality improvement. And we believe the trend continues.
Ramesh, the one concern in this rising interest rate scenario is that banks have already started hiking their MCLR, and we saw that play out even before the policy. How is it that companies such as you will protect your margins and spreads going forward, and how much will your cost increase thereby?
So, if 25 basis point increase, and I said it right at the beginning, we will not want to necessarily immediately pass on this 25 basis point increase. But if you were to look at the last 6 months plus, I think the overall cost increase has been a little upward of 40 basis point, and we have once corrected our lending rate already. I think it's also important to understand for a vehicle, let's say a 5 lakh rupee vehicle, if somebody wants to buy, and if 0.5% is the increase rate, which is about 2,500, 3,000 rupees increase, I think the dealer, the OEM, the finance company definitely come together and understand, how much to pass on, what needs to be absorbed. So I don't think the cost increase is all falling on just the financiers. It sometimes gets distributed between the dealer, OEM and the financier as well. But the fact remains that all this earn and pay vehicle, which are need-based product, as the customer wants to acquire this product, this 0.5% is not his decision point on whether he wants to acquire a vehicle or not. I think the cost plays a role when it comes to personal segment, where customer thinks, why buy now, can I wait for some more time? And then he looks at what's the resale price of his old vehicle that he possesses, and he takes a collective decision. My personal view is that operating costs normally do not dent the volumes. It's the price increase of the vehicle which possibly sometimes delay buying decisions.
Right. Mr. Iyer, finally then, do you think that the concerns regarding asset quality are soon likely to bottom out? And for your own self, what would this rising interest rate environment mean for disbursements and AUM growth? Can you sustain above 15% on AUM growth?
I think the demand is high, footfall at the dealerships are high, and we have not seen too much of competition where we are present. We are present in 330,000 villages, and we are multi-product company. So a little increase in the borrowing cost for us, which we either pass on or co-share it with other partners, as I said, and therefore we don't see there's going to be any pressure on our disbursements as far as the asset side is concerned. As far as asset quality is concerned, last 4 quarters, as you've seen, every quarter has been an improvement over the previous quarter in spite of moving to 90 days. And therefore, we believe that the worst is behind as far as asset quality is concerned. And with sentiments positive, the previous season yields were good, support price has been average plus, and this season monsoon is kind of projected to be good. I think the overall cash flow in the rural market would remain positive.
All right, Mr. Iyer, we leave it at that. Thanks very much for joining us with a corporate view on how the business is likely to shape up in the wake of rural recovery sustaining itself, as also in a rising interest rate environment. Positive words coming in there, encouraging words coming in there for Mr. Iyer. And JM Financial is saying this one is one of the best businesses that they see in the NBFC space, which is why they put out a buy target on M&M Financial Services with a target of 625. So